It's okay, no problem. So we have done this part. That's not a major issue. We have only, so depreciation is what we have to do. For depreciation, we go to point number 10. Depreciation will be based on the average rate of depreciation on closing gross PPE. What is PPE? Property, plant, and equipment. Based on closing gross PPE. Okay. Average rate of depreciation, which means I will first need to find out the PPE figures for 17, 18, 19 and 20. जब तक आप वो नहीं find out करोगे, you can't find out the depreciation. So which means I will have to first do PPE. PPE के ऊपर have they given anything there? ये देखो, point number 9. CapEx will be kept to a minimal of 300K in each of the years. Which means that if I go to my forecasting model and I go to PPE, I need to add plus 300 in each of these years. Am I right? From 17 to 20. Because every year I'm going to make capital expenditure of 300. So which means my CapEx, my property, plant and equipment gross numbers are going to change. Is it not? Next step is to find out depreciation as a percentage of gross PPE for the previous years. So I go to the depreciation expense here. Where's the depreciation expense? This one. And I take what? Depreciation of each year divided by gross PPE for that year. ठीक है ना? And then I convert that into percentage and I drag it to the right. And these are my numbers. So sorry, this has to be from, this has to be here actually. These are from 14, 15 and have I taken the wrong number? Sorry. I mistaken. So depreciation of each year divided by gross PPE of that year. And then drag it. So these should be your depreciation percentages for each year based on the gross PPE of that year. Am I right? Now we need to take the average of these numbers. So take the average of these depreciation rates. Do you get 3.57%? Do you get 3.57%? Please check. Which means that I will now have to calculate the depreciation at 3.5% of my gross PPE for each of the years 17 to 20. Am I making sense? So I go to my depreciation here and I do is equal to gross PPE for that year closing multiplied by 3.57% for each year. But before you drag, please freeze that 3.57% what I've said. So these become your depreciation numbers for all the 4 years. 2218, 2229, 2239 and 2250. Please check if this is right. So now am I done with all my operating expenses? Am I done? Tanutra, am I done with all the operating expenses? So what should be the next step? Next step should be calculation of EBIT. So first let's total all the operating expenses and see what you get. Just take a sum of these 4. These are your operating expenses. and then reduce operating income minus operating expenses will give you the EBIT for all the 4 years. ये देखो 1971, 881, 118 and negative 342. Am I right? है कि नहीं? हेलो, हाँ या ना बोलोगे तो मेरे लिए बेटर है.
Yes, sir.
तो
Yes,
कंटिन्यू.
sir.
Now we come to the other most important part, which is, so can I tick this part now? This is done. So what are the points we have covered? We have covered depreciation and capex both. 9 and 10 is done. All of you? Huh? What didn't you get in depreciation? Did you get 3.57%? तो बस उसके बाद you just multiply this gross PPE with this 3.57% for all the years, you will get it. Just check. First you check, then we proceed. You guys need to check first, only then I move ahead. I'm just highlighting the critical figures. Operating income needs to be in bold. Operating expenses need to be in bold. EBIT needs to be in bold. You got it, Saurabh? So can we move it down? Yeah, very good. So net interest expense के लिए I need this part, point number 7 and point number 8. Now look at the term. The term is very important. What is written here? Net interest expense. Now, who can tell me, online or offline, what do you mean by the term net interest expense? Harshita, are you there in the lecture?
Yes, sir.
What do you mean by the term net interest expense, Harshita? Okay, no problem. Ritik, what about you?
Sir, is it like what interest we have received and paid? Like,
Yes.
is the average of that?
Not average. It's the no. In expenses minus the income that you have received.
Okay, right.
The term is net interest income. That means whatever expense we have paid minus whatever income we have received.
Received.
That's net interest income. So उसके लिए now what we have to do is ये वाला जो part है इसको आप ध्यान से देखिए. This part, short term debt to be used as the plug. Short term debt is to be used as the plug. Plug means what? Ashika, what does plug mean? Are you there in the class, Ashika?
Yes, sir. Plug,
Plug
as
means
in you can use that to change the interest expense, as in that would be the source of the formula for the net
very good.
interest.
And what exactly do you mean by the term plug in in the modeling terms is plug is basically your balancing figure. See, we are trying to make the balance sheet, no, Ashika?
Yes, sir.
Trying to make the balance sheet. So we will be putting all these assets and liabilities that you see on the screen. We will be putting that in the based on forecasted numbers. So based
Yes.
forecasting numbers, it doesn't mean that it will tie up.
Yeah. So
Have to match up to liabilities. But
yes.
forecasting every item separately. Some at
Yes.
3%, some at some different, some at trend, some at something. So it doesn't mean now that your balance sheet will tie up. It may not,
Yes.
will not. So you will need to have one line which is the plug, which means you need to put a balancing figure there by means of iterative calculation, where Excel can perform iterative calculations and in a manner that your balance sheet will tie up at the end.
Got it, sir.
So which basically means for you people now, iterative means अभी उसके लिए हम कुछ नहीं कर सकते. For short-term debt, we can't do anything now. We will have to do it right at the end, when every other aspect of P&L and balance sheet is done. Right at the end, we can take the plug, which is the short-term debt. But what is the implication of that? Your interest on debt will be dependent on short-term debt. Now, till you have the short-term debt, your interest will not come. Till you have your interest, your profit will not come. Till you have your profit, your retained earnings will not get populated. Till your retained earnings is not populated, your balance sheet is not populated. So you enter into a loop. So for solving that loop, Excel provides a fantastic solution which is called as iterative functionality. So what we will do is, we don't know the short-term debt up till now. That will get populated only at the end. So we will assume as if nothing is there, but we will still model the formula to capture the short-term debt. Are you getting? Now look at this question. What does it say? Interest expense is comprised of the interest company pays for its short-term debt plus interest it pays for long-term debt. Long-term debt is obviously less expensive. Short-term debt is more expensive. Long-term debt 5.7% and short-term debt 6.7%. उसके पहले interest income will be on from cash deposits of the firm, 1% calculated on closing balance, which means I need the cash balance also. Now look at point number 12. What does it say? Minimum cash balance for Steelco is set to be at 6,500,000. So this is straightforward. So I go to my cash and I write here 6,500. This is given, so nothing much is to be done. This is straightforward. 6,500, it's given to you in the question. So first I write that down. Next, company has to prepay the principal of long-term debt in annual installments of 60,33,000, which means every year from my long-term liability, I'm going to reduce 6033, because you are paying off that much debt. So your liability will come down by 6033 in every year. It's mentioned 6033,000. But since all the numbers are in thousands, we will just do minus 6033. And iske baad we will just drag it. So this will give you your long-term debt also. Please check if you get these numbers. 47284. 47284, 41251, 35218, and 29185. This is your long-term debt. So you have long-term debt, you have cash. The only thing which remains is short-term debt, which is the plug. So what I will do now is I can find out the net interest expense, which will be equal to long-term debt into 5.7%. plus short-term debt you don't know, but still you link it. फिर भी link करो, so that when you perform the iterative, these numbers will get auto-populated. Plus short-term debt into 6.7% minus income, which will be cash balance into 1%. Remember, it was given in the question, 1% income on closing cash balance. So this will be your net interest expense. Please check. 2630, 2286, 1942 and 1519. यहाँ पे नहीं मैच करेगा because अभी मेरा प्लग डाला नहीं है मैंने, but this is how it will be modeled. Is it clear? इसमें learning क्या थी, Maria? What we had to do in this case was that we have to assume that there is some number in the short-term debt. We can't ignore it. So look at the question, what I have done. I have taken long-term debt into 5.7% plus short-term debt. Even if it is not there, I have still linked it into 6.7% so that later, when iterative calculation fills it up, I will have reference. Minus your cash deposits into 1%. So that's now, which are the points we have covered? We have covered point number 5. Sorry, point number 7 we have covered. And point number 8 also we have covered. Interest income. Clear? This also we have done. Point number 11. Repayment of debt. This also is done. So now nothing much remains. Only one part remains, which is this part. Point number 14. What is given? Other non-current assets is assumed to be as constant. So what you will do in the other non-current assets, this one, just take equal to this number and drag it. So other non-current assets will remain at 18,840. Right? Now accumulated depreciation. Now we will come to now next part. How will you get accumulated depreciation? Siddhi, how will you get accumulated depreciation? Not subtract, you should actually add it. So accumulated depreciation till last year plus depreciation of this year. But she's right, because accumulated depreciation is given as minus. So you will take minus of that, whatever number is there, minus depreciation of this year, so that the value increases. So what should you do? Accumulated depreciation minus depreciation of this year will give you accumulated depreciation of the next years. Accumulated means what? Cumulative value. So this becomes your accumulated depreciation. Please check. 21520, 237. What didn't you get? 7492598 and 28238. क्या हुआ ऐश्वर्या? See, what is the accumulated depreciation? Forget the sign, okay? Just forget the sign. What is the accumulated depreciation as of 16/8? 19. What is it? 1930. Accumulated depreciation is kind of. मेरे क्लास में ना पेन रखा करो यार, it becomes very difficult like this. Accumulated depreciation as of 2016 is 1930. What is the depreciation for 2017, Aishwarya? So that means accumulated depreciation for 2017 should be what? Accumulated. Accumulated means keeps on adding. So 520, 21, 520 होना चाहिए ना? But the problem is this number is already given in minus. So what will you do? This also will be, if you add it, it will reduce, which is wrong. That's why mathematically you have to reduce the depreciation. Because see, you reduce the depreciation from the asset value to get the net value. That's why it is given as minus. Is it clear now? So your net, now Aishwarya, see next part. Your gross block plus the accumulated depreciation, because it is already in negative, will give you your net block. See, basically, what is depreciation? Wear and tear. So whatever wear and tear cost has happened, we reduce it from the original cost to get the net value. That's why it is in negative. So this should be your PP net figures: 40620, 38691, 36752, and 34802. Please check. The ones who are online also, please check, all of you. Is it okay? So now you can get your total non-current assets. How will you get your total non-current assets? It will be PP net plus other non-current assets. So this is simple, straightforward. So this will be your total non-current assets. Right? So now we have to move to the current asset, जिसके लिए थोड़ी सी मेहनत करनी पड़ेगी, but it is very simple. Look at point number 6. This is the only point which remains. Working capital components to be estimated using linear forecast on the operating cycle, which means percentage of sales. For everything, for all assets, percentage of sales; for all liabilities, percentage of cost. Please remember this. Why? Because when you're recording a sale, profit margin is included. So you should take it as a percentage of sales. But when you're buying inventory or something, you are buying at cost. So it should always be based on percentage of cost. So you can write it down: all liabilities to be percentage of cost, all assets to be percentage of sales. And this has to be a linear forecast. So you please do, आप सिर्फ अभी देखो मैं क्या कर रहा हूं. Just look. Accounts receivable, it has to be percentage of sales. So Aishwarya, what I will do here, यहाँ देखो please. Here, okay. I will do accounts receivable for every year divided by sales of that year. Am I right? Accounts receivable for the year divided by sales of that year. Please check if you are getting these numbers: 37.72, 37.15, and 36.16. Right? Now we have to do linear forecast for 17 to 20. So यहाँ पे क्या करोगे आप? Very good. Now you're getting it. Now you are getting it. Is equal to trend known wise, which are your these numbers, comma known axis, which is these numbers, and then new axis, which is these. You will get all the percentages. So it will be 35.46, 34.68, 33.9. Now be very careful. यहाँ पे ना, this is repetitive. So you don't need to do the same process every time because it's very repetitive. Isn't it? So what will I do? For the next part, inventories. Inventories, पूछो एक बार छोड़ो. Just copy paste this on other current assets also. Forget about inventories, but copy paste what you did even for other current assets. Means what? First you find out other current assets as a percentage of revenue for each of the years. Am I right? Inventory, why I have left? Because inventory has to be at cost. So usko chhod do. So if you have these numbers as a percentage of sales, this trend will also be calculated. Same formula. I just copy pasted the formula. That's it. So I'll get 3.45, 4.04, 4.63, and 5.22%. Okay. For inventories, we can't do percentage of sales. We have to do percentage of COGS, cost of sales or cost of goods sold. So यहाँ पे what I will do, Aishwarya, I will do inventory value divided by, this time I will not divide by sales. I will divide by cost of sales. So this is your inventory percentage. And now what you need to do? Copy, paste. Because वो same ही है, logic तो वही है. So this should be your percentages. So 21.55. Did I make a mistake here? I did, I think. Wait. It will be is equal to trend, these numbers by these, and then these. $21.55, 21.42. No, I'm getting something else. वही तो मैं भी देख रहा हूँ क्यों हो रहा है. 35.46, 34.68, 33.9, and 33.12. This is correct. 3.45, 4.04, 4.63, and 5.22 is also correct. अभी ठीक आ गया ना? नहीं. It should be, these should be, what have I done here? C43 में वही तो किया. Have I not done it on? Wait. Is equal to inventory value divided by cost of sales. यही है ना cost of sales. What did I do? Is it these numbers? हाँ. 24.06, 24.08, 24.1, and 24.12. बस एक बार ये आ गया, you don't need to do much. What will you do? Be very careful. This is not growth. These are not growth numbers. So you can't do equal to previous into 1 plus this. These are percentages of revenue. That means you will do revenue value, whatever is the revenue, multiplied by these percentages. Be very careful. Huh? This is where people goof up. These are not growth numbers. Same thing for assets also. Revenue numbers into the percentages. But for inventory, what will you do? Cost of sales into these percentages, which is this number, into the percentages. So एक ही बार में all of this will be done. So these are the values you should get. Please check. And then your total current assets is also ready. These are your total current assets. This also should be in bold. 76678. Perfect. 70208, 66006, and 63942. Is that right? Current assets is done, non-current assets is done, which means your total assets are also now ready. Total assets will be current assets plus non-current assets. So this is also done. एक बार में खत्म. So you got current assets also and you got non-current assets. And current assets plus non-current assets will give you your total assets. Now, remaining thing is very simple. What will you do for accounts payable? Accounts payable, again, percentage of cost of sales. Which means यहाँ पे you will have to calculate the percentage. So, accounts payable as a percentage of cost of sales. And apply the trend function now. Yeah, perfect. 6.94, 5.43, 3.93 and 2.42. कम होता जा रहा है ना? Numbers are declining. That's why. बस उसके बाद accounts payable will be cost of sales for each year multiplied by these percentages. What will you do for other current liabilities? Same thing. What you did for this, you will also do for that. Absolutely same. Same thing. So what you should do? ये देखो यहाँ पे. Again do this. Other current liabilities divided by cost of sales for each year. Take the percentage, drag it, and apply the trend function. So you will get this 3.63, 4.02, 4.42, and 4.81. And उसके बाद just multiply your cost of sales for that year into these percentages. So you will get your other current liabilities also. Easy exercise, nothing much. So we are done with this. Short-term debt you don't know, forget it. But total current liabilities when you are doing, you assume as if something is there in that short-term debt box. So you see what formula I have put. Look at the formula. I have assumed that there is something there in the short-term debt ka box, even if it's not there. Still I have assumed. Kyun? Because when Excel populates it, automatically it gets considered. Clear? Long-term debt is done. So total non-current liabilities is nothing but this number. You don't have to do anything here. Just bold it. This is your total non-current liabilities. This is your total current liabilities. Share capital is not going to change. So this is going to remain the same. Share capital ke liye they have not mentioned anything, no? So share capital remains the same. What will happen, Samiksha? What will I get? What will I do to retained earnings? Brilliant. Very good. So you take the retained earnings of last year and add the net profit. But अभी हम net profit तक पहुंचे नहीं है, which means I need to go back to my P&L and find out my pre-tax income. What will be my pre-tax income? EBIT minus the net interest expense. This is my pre-tax income. Clear? Now, losses है ना यहाँ पे. You don't have profits. So what's first we have to find out what is the tax rate. What is the tax rate? Did you find out? Tax rate is nothing but your taxes divided by pre-tax income. So what is the tax rate you're getting? 33% you're getting for every year. So यहाँ पे I can do a formula. What is the formula? If my pre-tax income is greater than 0, then pre-tax income into 33% is 0. समझ में आया? No. Look here. If my pre-tax income is, see what I have done there. Look at the formula. If, then, else. If, condition, then, this, else, that. So if my pre-tax income is greater than 0, that means if I have positive income, then only I will pay tax. Huh? So if my pre-tax income is greater than 0, then pre-tax income into 33%, else 0. Negative में थोड़ी tax देने का है.
अभी 0 है.
आने दो, doesn't matter. Maybe now, but when you will do iterative, it will change. So यहाँ पे अभी, that's why I put if then function. This will be 0. And how will you get your net income? It will be pre-tax income minus the taxes. That's how you will get your net income. So now we come back to what Samiksha was saying. This number that you are getting here, you need to add to your retained earnings. So that means retained earnings will be previous retained earnings plus this loss figure or income figure. Is it clear? Up, next step, total shareholders equity, which will be share capital plus retained. And now we arrive at total liabilities and equity, which will be current liabilities plus non-current liabilities plus equity. Now you can apply the plug. Now you tell me at this point, anybody, online, offline, anyone, at this point, is your liability and asset matching? Is your liability and asset matching? No. Now, before you do the iterative, I'll ask you something. For the non-MacBook users, please go to File. File में जाके go to Options या Calculation Options होगा देखो. Do you have options? In the options, do you have calculation options? या formulas करके कुछ है? Click on formulas. On the right hand side, enable iterative calculation. Please tick that checkbox. Done? Close कर दो उसको. Okay करके close कर दो. So iterative calculation is now ready. For MacBook users, look here, for MacBook users, I'll go to Excel preferences. MacBook users, Excel preferences, calculations. Look here, I have enabled use iterative calculation. मेरा enable हो गया. Now, what I will do is, look here. If I look at the equation, how does the equation look like? How does the equation look like? Your assets should be equal to liabilities plus equity. Your assets should be equal to liabilities. Now, liabilities will have short-term debt also, which we don't know. So, assets is equal to short-term debt plus other liabilities. So, short-term debt will be what? Assets minus liabilities. Isn't it? So, what I will do here, now please pay attention, don't miss this part. Press equal to. Now, you need to take that cell also. So, how will you take that cell also? Go back and come forward. If you go back and come forward, you are again on that cell. Press plus. Plus assets minus liabilities. Enter and drag. And now tell me if your balance sheet is telling. Aha. Is it telling now? Look here. 136,138, 136,138, 127,739, 127,739, 121,598, 121,598, 117,584, 117,584. Can you see your short-term debt is populated? Based on that, your net interest is done. This is done. This is done. Everything is complete. Entire balance sheet P&L is done. Clear? I have to stop the recording here. That completes the session. Now you guys don't log off, just be here.